Hello and welcome to Crypto Desk. In today's video we will be going over some of the main trading and investment strategies. Trading strategy? An exchanging methodology is just an arrangement you follow while executing exchanges. There's no single right way to deal with exchanging, so every procedure will generally rely upon the dealer's profile and inclinations. No matter what your way to deal with exchanging, laying out an arrangement is urgent. It traces clear objectives and can keep you from going off base because of feelings. Ordinarily, you'll need to conclude what you're exchanging, how you will exchange it, and where you'll enter and exit. In the accompanying section, we'll get into a couple of instances of well-known exchanging systems. What is portfolio management? Portfolio: the executives worry about the creation and treatment of an assortment of ventures. In the event that you're solely exchanging cryptographic forms of money, it will presumably be comprised of a mix of Bitcoin and other advanced coins and tokens. Your initial step is to think about your assumptions for the portfolio. Is it safe to say that you are searching for a crate of speculations that will remain generally safeguarded from instability, or something less secure that could acquire better yields at the present moment? Placing some ideas into how you need to deal with your portfolio is profoundly useful. Some could favor an aloof methodology, a single where you leave your ventures after you set them up. Others could adopt a functioning strategy, where they consistently trade resources to create gains. What is risk management? Overseeing hazards is imperative to accomplishment in exchanging. This starts with the distinguishing proof of the sorts of hazard you might experience. Market hazard: the potential misfortunes you could incite in the event that the resource loses esteem. Liquidity hazard: the potential misfortunes emerging from illiquid markets, where you can only with significant effort track down purchasers for your resources. Functional gamble: the potential misfortunes that originate from functional disappointments. These might be because of human mistakes, equipment/programming disappointment, or deliberate false lead by workers. Foundational hazard: the potential misfortunes brought about by the disappointment of players in the business you work in, which impacts all organizations in that area. Similar to the case in 2008, the breakdown of the Lehman Brothers had a falling impact on overall monetary frameworks. If you're finding this video helpful, please don't forget to like and subscribe and turn on post notifications so you don't miss out on future uploads on the channel. Day trading. Day exchanging is a procedure that includes entering and leaving positions around the same time. The term comes from heritage markets, referring to the way that they're just open for set periods during the day. Outside of those periods, informal investors are not relied upon to keep any of their positions open. Digital currency markets, as you most likely know, are not exposed to opening or shutting times. You can exchange non-stop all year long. All things considered, day exchanging, the setting of digital money, will in general allude to an exchanging style where the merchant enters and leaves positions within 24 hours. In day exchanging, you'll frequently depend on a specialized investigation to figure out which resources for exchange. Since benefits in such a brief period can be negligible, you might pick to exchange across a wide scope of resources for an attempt and amplify your profits. All things considered, some could solely exchange similar pairs for a really long time. This style is clearly an exceptionally dynamic exchanging methodology. It tends to be profoundly beneficial, yet it conveys with it a lot of hazards. Accordingly, day exchanging is for the most part more qualified to experienced dealers. Swing trading. In swing exchanging, you're actually attempting to benefit off market patterns, yet the time skyline is longer. Positions are commonly held any place from 2 or 3 days to several months. Frequently, your objective will be to recognize a resource that looks underestimated and is probably going to increment in esteem. You would buy this resource, then, at that point, offer it when the value ascends to produce a benefit. Or on the other hand, you can attempt to observe exaggerated resources that are probably going to diminish in esteem. Then, at that point, you could sell some of them at an excessive cost, wanting to repurchase them at a lower cost. Similarly, as with day exchanging, many swing dealers utilize specialized examination. Notwithstanding, on the grounds that their technique works out across a more extended period, the major examination may likewise be a significant apparatus. Swing exchanging will in general be a more amateur-amicable procedure, predominantly on the grounds that it doesn't accompany the pressure of speedy day exchanging. Where the last option is portrayed by quick navigation and a great deal of screen time, swing exchanging permits you to take as much time as is needed. Asset allocation and diversification. Resource distribution and enhancement are terms that will generally be utilized reciprocally. You could know the standards from the maxim "don't keep all your investments tied up in one place." Keeping all of your investments tied up in one place makes a main issue of disappointment, Similar remains constant for your abundance. Putting your life reserve funds into one resource opens you to a similar sort of hazard. Assuming the resource being referred to was a load of a specific organization and that organization then, at that point, collapsed, you'd lose your cash in one quick development. This isn't simply valid for single resources, but resource classes. On account of a monetary emergency, you'd expect all of the stock you hold to lose esteem. This is on the grounds that they're intensely corresponded, implying that all will more often than not pursue a similar direction. Great broadening isn't just filling your portfolio with many different advanced monetary forms. Consider an occasion where the world legislatures boycott digital forms of money, or quantum PCs break the public key cryptography plans we use in them. Both of these events would significantly affect every computerized resource. Like stocks, they make up a solitary resource class. We recommend look at Binance Academy's asset allocation and diversification. That's all for now. Let us know your thoughts in the comments down below and don't forget to subscribe to my channel.